Hey guys, welcome back to another episode of the Money Press Podcast. My name is Gregor Massino, and today we're going to look into things I said look into twice. That's not good. But things that I do when it comes into investing stocks. How do I pick stocks, right? The step process is going to be very simple. I'm going to dumb it down so everyone can understand. But before that, I have some new followers, either from Jiu-Jitsu or from my lifting videos. So I'm just going to be a quick rundown, have some questions you guys might have. So I'm going to try to answer them the best of my ability. Am I a finance major or advisor? No, not at all. Not one bit. I'm a bio major at Coinbase University. Am I some financial guru? I live with my parents.
This is not my money, girl. I do not have nothing.
Ain't no guru. I ain't find no secret hack or nothing. Everything I'm going to teach you guys, it's already out there. Just enlightening on the topic. How long have I been investing for? 3 years. I bought my first stock on August 12, 2019. I was about to turn 19, so roughly about 3 years. I'm 21 now. What type of investment strategy do I do? I do long-term dividend investing. There's many reasons why I do it, but it's safer for me, right? So I'll explain later. Have I made money in the stock market? Yes. Have I lost money? Yes, I have. But if you're wondering if I'm, what's my net total? Like, am I completely positive or like negative or neutral? I am very much positive. I made 28% of what I put in the stock market. So I am beating inflation by 4.5. Is investing scary or hard? Well, that's up to you. You want to be a risky investor? Go ahead. You might be stressing a little bit. You want to be a lazy investor? There's some perks to that. You want to be like a common investor, not too lazy, put a little bit more work in? Yeah. Not scary at all. You got to calculate your risk factors. What I put in the stock market, you might not be able to meet up, or I can't meet up what you put in, right? Most of the people who are following this have better income streams than I do. So you guys could probably be able to put in more in the stock market than I can, right? I'm not going to follow you because I know my risk. I know what I can put in, and I know what I can lose too. That's another thing. People don't calculate what they can lose. That's the whole point of a risk factor. People say, okay, I have this much left over. Let me put this much in. Well, are you comfortable losing all that? You have to like separate your emotions. You have to know in your mind that, okay, if I invest this money, I'm okay losing it. That's another thing about investing. No investment is 100% safe. Just know that there's something that could just happen, right? But you could do your due diligence research and invest in safe stuff, right? That are safe stuff that are higher. And why should you consider investing? Well, let me just bring a scenario up. Let's say you have some money in the bank. What are you making off of that? 0.01% the bank is giving you? Inflation 6.2. Who's winning? You could invest that money in the stock market and do some due diligence research and have a 7% return on your money per year. Or you don't have to invest in the stock market. You can invest in, let's say, real estate, right? Let's say you qualify for FHA loan, which is a Federal Housing Administration loan. And all you need is a down payment of 3.5% of the cost. So let's say you want to get a 3-family, which is about $650, right? Let's say $650, and you only need 3.5%, which is about $22,007 something. So 22.7K. Would you rather save up to 22.7K and rent out 3 apartments? Average rent around my block is $2,000. So would you rather gain $6,000 extra per month, which is about $72,000 per year, or just keep that money in the bank? You see, that's how you break the rat race. That's how you break an investor consumer mindset. That's how you create generational wealth. That's how you're able to live the life you always wanted to live, right? You want to have more money so you can have more freedom doing whatever you want. Well, that's where investing comes in. You have to put in money to make money. So yeah. So like I said before, I do dividend investing. So if you were to, copy my strategy, and this is not financial advice because I did say I'm not a financial advisor. You could do this if you want. The best dividends to invest in are Dividend Kings and Aristocrats. Now, what's a Dividend King? A Dividend King is a company that's been paying out the dividends for 50 years plus. And a Dividend Aristocrat has been paying their dividends for 25 years plus. Examples of Dividend Kings is Johnson & Johnson, 3M, Procter & Gamble, and Coca-Cola. Dividend Aristocrats is IBM, Aflac, Walgreens, and Cardinal Health. Why look into these companies? Well, having a track record like that makes me as an investor more safe in putting my money within your company. If I know that for 50 years plus, you've been paying out dividends to investors, okay, shoot, I'd rather go with someone who's been paying for 50 years than someone who's been paying for 5 years. You know what I'm saying? Or I'd rather go with someone who's been doing 25 years plus than someone who's only been doing it for 2 years. And you use those dividends to reinvest in that company to create some compound interest, to compound your money. Another thing I look into is the dividend yield, right? So the dividend yield, the higher the yield, the more they pay you, right? So you might think, okay, high yield is what I'm going for. No, don't do that. I'm gonna be honest. Don't try to get money fast. If you want to be a short-term investor, then do swing trading or day trading or short-term options, something like that, or Forex. Make some 7 figures.
This is true of all MLMs. Here's another leader who goes by Young Frio, who got caught slipping talking about where the money really comes from at an IM event.
I told you how you're gonna get rich. I told you how you're gonna make 7 figures. I didn't tell you you're making 7 figures from trading. You're gonna make 7 figures from this side. I'm not afraid to say it.
But this is not the strategy for overnight success. This is something you want long term. So a good yield to shoot for is 2 to 7%. I go for it. Below 2. There's companies, I'm not gonna lie, that I invest in that's below 2, like Apple. And I think there was a company I invested in that was I invested in that was above 7. I think it was AT&T, but I sold that stock. I had it long term, but something happened. I didn't like it, so I said, nah, I'm not putting my money in there no more. So, boom. So that yield range, it's moderate growth, right? So they have enough to pay you, and they're paying you at a moderate rate, and you can use that money to compound. It's giving you more security where you're putting your money in, right? So with that being said, you're probably wondering, how do I find a dividend yield, right? Well, if you have Robinhood, you could just scroll down and they could tell you the dividend yield. If they don't have a dividend yield, they're not most likely not a dividend company. So there might be a growth stock, a defensive stock, something like that. There's some websites you can use. I use dividend.com. You can also use Nasdaq.com as well for some more research. They tell you how long they've been. I'm not sure about Nasdaq. Most likely they do. They tell you how long they've been paying their dividends, and they tell you like the payout ratio, the PE ratio, stuff like that. A payout ratio you want to go for is below 60 to 70%. Why? Because the payout ratio is their profits, right? So if a company's paying, if their payout ratio is 100%, that means they're paying their dividend investors 100% of their profits. How they're investing back in the company?
How the fuck you know this? How? Hold on, bro.
It's not happening. So 60% is below 60 is a great range to go into. I mean, if you believe in the company that much and you're a long-term investor, you could do a little higher, 65, but I wouldn't do more than 70. That's just my personal opinion. And like I said, you calculate your risk, so do what you want. If you want to do higher than 70, you want to do it below 80, so you want to do 75 and stuff, go ahead. I also, not gonna lie, I also get some information from YouTube as well. There's some YouTubers that I follow that have been giving me reliable information. So like Andre Jig, Graham Stephan, those people, I like their videos, so I tune in and I learn a couple things from them. Bonus tips, right? So invest in companies that you use on a day-to-day basis, or companies that you like. So if you go to Starbucks pretty frequently, invest in Starbucks. You like Chipotle, invest in Chipotle. You're a drop shipper and you like Shopify, or you have a business and it's hosted by Shopify, well, that's not a dividend company, but invest in Shopify. You're a contractor, invest in Lowe's, Caterpillar, Home Depot. Those are stuff you can invest in. Another thing, create a strategy. So a well-known strategy that I use is dollar cost averaging. What is that? Well, let's say I invest like $25 a week in the stock market. I just continuously buy the dip, buy it when it's green. So when it's profiting, when it's losing money, if I have that much faith in the company, and I'm a long-term investor, so that's 5+ years in my opinion. Well, I'm gonna keep. That's not the textbook definition. 5+ years is not the textbook definition. You could do a year and a day according to the IRS, but for me, 5 years plus. I have that much faith. $25 a week, I'm investing in the stock market. That's not my real thing. This is just an example. And I continuously do that. So when it's green, when it's red, I keep buying, right? For you, you could probably put more, $100 a week, or you could do monthly, $100 a month, $200 a month. You could do stuff like that. And your portfolio will build and build, and you're getting dividends either monthly or quarterly. And you can use that dividend to compound onto the money you do. So it's like stepping stones. I don't know why I'm moving my neck like that. That was like a little sus. My apologies for that. My apologies. Or you could try lump sum investing, right? Which is let's say you have 10K in the bank right now. You just take the 10K and throw it in the stock market and invest in all the stocks you do. And you don't want to invest until the next year, or you just want to leave it like that. You can do it like that if you want. Diversify your portfolio. So don't stick into one sector, or, well, you can if you want, but don't stick into all your money in one company, right? Don't put all your money in Tesla, all your money in Apple. Like, don't do that. I'm just going to be honest. And honestly, don't even do that for one sector, because there's times where one sector does terrible, right? Let's say the traveling sector. I don't know the official name, but let's say the traveling sector. Corona, you guys tanked. I was in the traveling sector, but I only had like 1-2 stocks in there. My portfolio is so diversified. I have multiple companies within sectors and multiple sectors. So you guys should do that, so you can distribute your money more. So when one sector, one company does bad, you don't lose all your money. You know, you have other companies and sectors who are pulling up the weight. And another thing, guys, don't try to be a millionaire overnight with this. This is, like I said, you have to let this grow. It's long-term investing. If you want money overnight, you can do day trading, short-term options, Forex. I'm not trying to sell you guys a gimmick. This can benefit you guys for real. But I'm not promising you guys you're going to be a millionaire. That's not what I'm going to say. No. You guys can make money though, for sure. Just do your research, you know. Be mindful what you invest in. I've lost money, like I said. That's full transparency. No investment is 100% safe. So yes, I have lost money, but with the principles I've implemented, I have made more than I lost. And that's what you need to go for. When's the best time to invest? Now. If you can, go ahead and invest $5, right? If you want to do crypto, invest $5 a week, $3 a week, something like that. Start investing. It'll be great for you. And another thing I want to shed some light on. If you see a stock that's on the news that skyrocket, don't try to hop on that trend. It most likely is done up. You burning your money. Don't even try it. Just don't. Right? I'll give you an example. Elon Musk tweeted Doge, right? And Doge price went up. And there were speculations. No, he was going to appear on SNL. And there was people, since it's mainstream already, people thought, oh, it's a perfect time to invest. Wrong. There was a guy who tweeted saying that, oh, I hate Elon, this and that, because he said to put our money in Doge. And is it Dodge or Doge? I feel like I'm saying it wrong. He said put our money in Dodge, and I did. I put all my money. My parents left me when they died, and I lost it all. Don't blame Elon. Blame yourself. Don't invest like that. That's a crappy way to invest, right? I've seen so much investing content that sometimes I see, if I can find a video, I'll put it up, where people are like, oh, 3 cryptos or 3 stocks you can invest today that can make you $1 million in 2022. Stop it. Don't do that. Don't fall into that rat hole. That's not what investing is about.
Stop the cap. Stop the cap right now. Stop the cap.
Don't try to get rich quick. I'm telling you, ain't gonna work. No disrespect. I really don't mean no disrespect. When Forex was a thing, I knew it was a pyramid scheme. I knew it. I seen videos. If I find them, I'll post it right to the side of me, where people are saying that it's a pyramid scheme.
Check out IM Academy's social media guidelines handbook. You can be in the Benzo with the Gucci hat on. Just make sure you blur the Benz logo. Don't post any yacht photos. This includes, but not limited to, being on a yacht, parties on a yacht, in front of a yacht.
I am no longer in I Am Academy. If you do your research, you will really see that you're being lied to. And
you're not about to make money like that overnight. It's not sustainable. It doesn't make sense. You're not gonna make that much money overnight. Trading is not easy. I feel you can't make money. Hold up, you can't make money in trading though. There's been successful people trading. Good, but I'm just be honest. My investing is way easier than trading. I'm be dead honest. No disrespect. My investing is way easier than Forex. Way easier on my mental, and it's not fast money. And you shouldn't shoot for fast money. Just shoot to make moderate time. You know, Rick Ross said one time, "I don't like moving fast, but I want to move correct." Yeah, try to move correct when you're investing, whether it's in the stock market yourself. Don't try to be making microwave profit. Nah, let that thing marinate like grandma does when she like cooks her food the day before. You know, take your time with this. Yeah, and that's all, guys. Thank you for tuning in. My name is Gregor Masino, and next video will probably be on how to invest and like investing strategy for lazy people. It'll be like a quick short podcast. But thank you. Have a great day and Happy New Year.